Our next guest is the man who correctly predicted oil would reach $100 and gold $1,000. Here to join us with his outlook on energy, commodities, the dollar, the credit crisis, everything under the sun, including Fannie and Freddie. Jim Rogers, chairman of Rogers Holdings. He comes to us from Singapore this morning. Jim, good morning. So what do you think about what the government's doing or proposing to do with Fannie and Freddie?
It's an unmitigated disaster. I don't know where these guys get the audacity to take our money, taxpayer money, and buy stock in Fannie Mae. I mean, what is this? If that's what they're doing with our tax money, why don't they ask us? I didn't say take my money, my tax money, and buy Fannie Mae. Give it back to us if that's what they're going to do with it. And what are they doing guaranteeing their debt? The people who bought debt in Fannie Mae and Freddie Mac can read a prospectus. They can read it. It says it's not guaranteed by the government. Anybody who can read a balance sheet knew that both of those companies were a sham and they had problems. Now we got to bail out the Japanese. The Japanese owe hundreds of millions of dollars of this stuff, and so we're going to bail out the Japanese and the Chinese and everybody else in the world. What is this? And it ruins the Federal Reserve's balance sheet, and it makes the dollar more vulnerable, and it increases inflation, and it drives down the dollar. Other than that, good morning.
Good morning. All right, so where do you think this is? All right, you've been very critical of the Fed and certainly some of the government moves here, Jim. So where do you think this is all leading us to?
It's leading to more and more rampant inflation. It's leading to a decline and eventual demise of the United States dollar. You know, the FDIC this weekend used 10% of its assets to bail out a bank. Anybody who's got money in a bank in America better make sure they don't have over $100,000 because 10% of the FDIC's assets just went this morning.
Jim, a viewer emailed me last night, actually emailed Bloomberg, happens to be a mortgage banker, and his question was for you. He's wondering if you covered your shorts Friday, especially on Fannie Mae and Freddie Mac.
No, I've not covered my shorts. Obviously, I should have because, you know, they're already up 50% or something since then. If they go up a whole lot more, I'll short more. They're basically insolvent. There's no question about that. You know, the government itself last week said they were, the pool last week said that they're insolvent. Anybody can read a balance sheet knows they're insolvent. So if they go up a lot, I'll short more. If they go down, I'll probably cover.
Jim, it's Ellen Braitman here. I'm looking at the treasuries, which were little changed this morning. Now you've got the 10-year down 9/32. Why are we not seeing more of a move in the treasury market this morning? What should an investor reaction be on that front?
Well, I'm short U.S. government bonds. I'm short the long treasury. So for full disclosure, I think most people are just sitting here confused and probably relieved at the moment and trying to figure out how this is going to work out. But let me tell you how it's going to work out. It's going to mean the debt of the United States is going to be downgraded over the next few years. It means that U.S. government bonds are now going to become suspect down the line.
I want to go back to financials. So you mentioned Fannie and Freddie. Are you shorting most of the big names, be it Citigroup, Merrill Lynch? I mean, a lot of them are going to be reporting earnings this week or starting to, Jim. Do you not like any of the names here?
Carol, since I've been coming on your program, I've been short all the investment banks. I've been short Citibank. I've been short Fannie Mae. I'm still short every one of them. I'll cover them all someday, but someday is a long way from now. If they rally, I'll short some more. But no, why would anybody cover any of these stocks? They're all essentially in terrible, terrible financial shape.
You don't think we're getting to the end of this mess?
Well, Mr. Paulson said we've been coming to the end of it every month for the last year. I don't happen to agree with him.
What is your...
And Mr. Bernanke has also said we're coming... Mr. Bernanke has also said we're coming to the end of it. Mr. Bernanke, under oath, told us before Congress that the housing crisis, that there was no problem in housing 2 years ago and 3 years ago. Mr. Bernanke, under oath, has been telling us for a while that everything is okay.
Jim, I want to go back to Fannie and Freddie, if I may. I know I'm jumping around here because there's a lot going on. I mean, did we have a choice, though, with Fannie and Freddie? I mean, they're responsible for, what, half of the mortgages that are out there. I mean, could we have let them fail?
Carol, I know you always like to print money. You always like to bail out everybody in sight. But that's not the way capitalism is supposed to work. That's you know, capitalism. That's socialism for the rich. That's what that is. Welfare for the rich. Of course not. Now, if we don't let Fannie Mae go broke, and we're not, obviously, What's going to happen when you Band-Aid and put some Band-Aids on it for another year or 2 or 3? What's going to happen 3 years from now when the situation's much, much, much worse?
Okay.
Then somewhere along the line, the market is going to hit us, and we're not going to be able to do anything if we keep bailing out everybody in sight. The Federal Reserve has already extended its balance sheet so desperately that they have trouble.
So very critical, Jim, of what the government is proposing to do with Fannie and Freddie, but yet investors seem to like it, and you've got the dollar moving up, so there seems to be a lot of support out there.
Well, of course, investors in Fannie Mae and Freddie might like it. You know, the companies were going to go bankrupt if they hadn't stepped in to do something, and they should have gone bankrupt, all the mistakes they made. I'd like to know why the people at Fannie Mae aren't in jail right now. The people in Freddie Mac aren't in jail.
But why is
a lot of
Jim,
people
why
going
is
to jail for fraud and scams.
Jim, why is the dollar up, though, this morning?
Well, I suspect it's because there's so many shorts. Everybody's negative on the dollar, including me, and whenever you have everybody on the same side of a trade, something comes along and you have a big rally. The shorts cover. It's the way markets have worked for a few hundred years.
You still negative on the dollar at this point?
I just said everybody in the world is negative on the dollar, including me, so it's bound to rally. It could rally for another few weeks, few months. How do I know? You know, I hope that if it does rally more this year, that I'll use that rally to get out of the rest of my U.S. dollars. The dollar's a terribly flawed currency, Carol.
Yeah. And that's based on what about your expectations for interest rates around the world? I mean, there's been a bit of a debate now about what the Fed may do, but you've certainly seen governments around the globe raising rates to combat inflation. What's your outlook there?
Well, you're going to see higher rates. I'm short United States government bonds, long bonds, because rates are going to go higher. The U.S. government says there's no inflation, but everybody else in the world knows there is inflation. Most governments don't lie about it anymore. They know they cannot lie about it. Inflation's here. The U.K. just a few minutes ago said they have the highest rate of inflation since 1986. Everybody does, and the U.K. is one of the governments that usually lies about it. So if they're saying it's that bad, you know it's really bad.
So, Jim, how do you think this is all going to be playing out? I mean, you're over there in Singapore, you're watching this. I mean, what's your expectations, first of all, for the U.S. and the economy here in the next, 6 to 12 months, and the markets, if you will?
Well, the United States is in a recession. It's going to be the worst recession we've had in a long time, perhaps since the Second World War, because the federal government keeps making mistakes. The central bank makes mistakes. The Treasury makes mistakes. Everybody keeps making mistakes. It's going to be one of the worst. It's like Arthur Burns in the 1970s. He kept making mistakes, and we had a horrible time. It's like the Bank of Japan in the 1990s. They kept making mistakes, and in Japan they still call up the 90s the lost decade.
Jim, it's Ellen Braitman again. I want to ask you a question I asked an earlier guest today, which is, when you look back over your entire career, how does this play out in terms of the level of history that is being made Friday, Sunday, and today? Well,
it's a very good question, and the answer, I don't think I want to give you the answer because you'll probably cut me off the air. You know, what's happening here is they're ruining the value of the U.S. dollar. They're ruining the Federal Reserve. They're ruining what has been one of the greatest economies in the world. They're bailing out everybody in sight. This is a disaster for America. This is a disaster for the world. Ben Bernanke and Paulson are bailing out their friends on Wall Street, but there are 300 million of us Americans who are going to have to pay for this, and there are 6 billion people in the world who are going to have to pay for this. And they're doing it with no authorization from anybody. You know, Paul Volcker said a couple of weeks ago that perhaps what the Federal Reserve has done is illegal. I would submit it is illegal what they have done and what they're doing. They're saddling all of us with hundreds of billions of dollars of debt that they have no authorization to do.
So, Jim, if this had been another industry, take your pick. I mean, look at the woes that we've seen in the housing industry. You don't think the government would have jumped in so quickly to help out?
Well, I have no idea. They jumped in once before and helped out Chrysler 25 years ago, 30 years ago. Who knows? Conceivably, it depends on how many votes they think they can get. If they can buy some votes, and right now they're trying to make all their friends on Wall Street happy, but that's not good for anybody else. But Wall Street, you know, Ben Bernanke picks up the phone every time Wall Street calls. Paulson picks up the phone every time Wall Street calls. You don't see any firemen out there in Nebraska calling him up. You don't see anybody out there with a real job. You don't see any school teachers in Oregon calling him up. If they did, they wouldn't take the call. But all the school teachers in Oregon know that prices are going through the roof, and it's very difficult for them to stay alive these days, and the whole body and soul together. They don't care. They take the calls from Bear Stearns. They take the call from Lehman Brothers.